Hello, this is Steve with the Free Bullion Investment Guide. Today is March 23rd, and I'm doing a review and outlook for the US dollar. This is the US dollar's 4-hour chart, and in review of last week's video, I had shown you this falling expanding wedge. It was a positive pattern for the US dollar. Excuse the pop-ups. It was a positive pattern for the US dollar, and the dollar rose above it as expected. I actually wasn't quite sure if it was going to break the pattern this week or next, but after Thursday's move up and Friday's, it clearly shot up above it and confirmed it as it was expected to do. I just wasn't sure on really when it was going to do it. It did test it broke above it as far as highs, but if it doesn't close above the pattern, then I don't call it a break. So, but it did confirm it on Thursday. Now, why did it fall? This big fall right here was caused by Jerome Powell's meeting with the Federal Reserve. Jerome Powell is the chairman, and he basically said he sees no rate hikes for the rest of the year. Now, I'd be surprised if in December we don't see a rate hike, simply because since December of 2015, each December we have seen a rate hike, and it was Janet Yellen's favorite month to raise rates, and she would threaten it all through the year, but she wouldn't raise it until December. And December is it's an easy month to raise rates. People are going on vacation, traders are headed out of town, and just people are paying more attention to the holidays and their families than what the market's doing. And it's just it's an easy time to raise rates, and I just wouldn't be surprised if they don't raise rates in December. But again, that's what, 7-8 months from now, so we'll worry about that then. But anyways, the dollar rose because there was some signs that the economy was still expanding, unlike what the what the Federal Reserve said, and also with what the financial media wants you to think, which there are clearly some indications that things are slowing down, but there's also other indications that it's moving up. So it's really an up and down situation as far as with the dollar. And that's what we're seeing. We're seeing week after week, down, up, down. Then we might see some more upward movement, but we'll have to see. It did touch the 96.80 level last week, but then it has just started to consolidate more, and we may see it test the $97 level next week, or even the 97.45. But clearly the falling wedge has been confirmed, and we're just going to ghost that out right now. I'll worry about changing all these lines for the sake of time, though. I will just ghost it out for right now. And I had ghosted in these lines. It makes it much easier for me to do that instead of playing with the lines in the middle of the video, just making the video hopefully go a little easier for both of us. So anyways, we got a rising wedge now. We have a rising wedge in the US dollar's price chart, and that is a negative pattern, which is why I stated that the dollar may rise up above the $97 price level, and it won't get too much higher. It's very unlikely that it will test the 97.45 level, if at all, next week, but we'll have to see. So clearly we have a negative pattern in the US dollar's price chart. It may rise up into it, but clearly the pattern looks like by the MACD that it might be cresting here shortly and maybe falling back down a little bit lower, may test the $96 support level this week. So we'll have to see, but I thank you for your time. Take care, and God bless.